took a few things out, and then I changed it from first person to third person just to
Sure.
I'll let you tell some of your story
Okay.
rather than me kind of like throw it all out there. It hits harder when it's fresh from you. So I don't want to steal any of your thunder, my man. I gotta
It's
give
all
you
good, bro. It's all good. One of us will jack it up either way. Yeah.
And so the of the 6 of 13 flips for the year, I don't know if you're still at that number. So I was just like, all right, we'll take less focus off the single family and more on the multi.
Yeah, that's fine. Yeah, that's totally fine. Yeah.
There's a lot of stories you can tell in there, and it'll be good.
Right. Yeah. Okay, cool.
You ready, Jake? You ready, Josh? Holy cow.
That's a compliment when I get that, right?
That's a Freudian slip right there, bro. I saw Jake all day yesterday, so that's why. Okay, Josh. Ready? Gabs, we're ready, Gabs. Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I am joined by my co-host, my brosif, Josh Rusin, community director of Jake and Gino. Josh, how you doing, bro?
Gino, doing well, my man. It was exciting yesterday, spending a full day with you, actually working on coaching with Petra and scaling up. How about yourself?
I'm doing good. The one thing I noticed yesterday is Josh had no caffeine throughout the whole day, so he was waning towards the end of the afternoon. It was a full day coaching. We practice what we preach, right, Josh? It's all about, I guess, personal growth, personal development, and I think coaching is a big element of it. And you just got to continue to learn, to grow, to set priorities, to set tasks, and to set goals, and then hold yourself accountable. And if you can't hold yourself accountable, you need a team member too. So one of the big takeaways is from yesterday was once you assign a task to somebody, it's got to be one person, because if there's two people assigned to it, then nobody's accountable. So if you're holding yourself accountable, you need somebody to hold you accountable to it. So it was a great day. It was great seeing the whole team yesterday.
It's a great takeaway. And another thing, Gino, I mean, how can you offer coaching yourself if you're not investing in coaching and practicing what you preach, right? You can always reach up, and there's levels to it. So proud to be working with a group that practices what they preach and put their money where their mouth is. So,
and it's amazing, Josh, the more money you spend on yourself, the more money you make in return down the road. So that was a really hard thing for me to do. Once you invest in yourself and you start spending money on yourself, that money comes back to you. And it's hard because when you don't have it, you're saying, I've got to make the money and then I'll invest in myself. I will guarantee you, if you can find the money to invest in your education and invest in yourself, you'll get that money back down the road.
Nice. There's a reason they call it an investment, right?
Mm-hmm. Yep, I agree.
So enough about that, and on to today's guest. So today we have Darren Light. So he's a mechanical engineer by trade. Darren quickly realized that his W-2 job and 401k would not support the current lifestyle and retirement that he wanted. At the convincing of a friend, he attended one of the guru seminars in the local area. After that, he started purchasing single-family rentals and doing flips. And then after being laid off from his corporate job at 12 years, he went all in real estate by cashing in his 401k and stock options. Now, in November of 2017, he actually attended the very first Jake and Gino event here in Knoxville. During that event, he made the decision to focus on multifamily assets and sell all of his single-family rentals while still flipping homes. Since October of 2018, he has become part owner on the GP side of in 103 doors. Wow. Darren thrives on inspiring and motivating others while living the go-giver attitude. Welcome, Darren.
Good morning, guys. Glad to be on. Appreciate it.
All right, so Darren, there's a lot here in that story. Let's talk about your thoughts going into real estate in that first seminar, kind of what changed, and how we decided to go to multifamily as the big picture goal. Would love to learn about that.
Thoughts going to that guru seminar. I'll be honest with you. I was dragged to that by a friend, and thought, real estate, that sounds cool. Didn't know a whole lot about it. Once I went to this guru seminar, if you will, I realized, okay, yeah, there's some potential here. I wasted a ton of money on this guru seminar. You have multiple meetings when you do this type of thing with these type of people. But made a decision to start a business of some form, which was purchasing single family homes and doing flips. Through that, ended up having a bad partnership, just learned about how to vet a partner through all that experience. And then once at that point in my W-2 career, literally 6 months before I was laid off from my job, it was almost as if God was prompting me to be ready for this to happen, because I would literally walk around the office and look at people, even though I could see myself sitting in my chair, staring at my monitor and thinking to myself, man, we are slaves to that monitor and or making someone else rich. Literally, these were the thoughts I had. And so when that layoff occurred, I had already made the decision through the first Jake and Gino event that occurred after that to go full-time multifamily. But when it happened, it forced me to make decisions that I would not have made or delayed making. And I was so ready. I was like, it's game time, 100 miles an hour. Let's do this. And so here we are.
So what was the difference between the first, I guess, I hate using that word guru, but that first seminar you went to and then joining the Jake and Gino community?
As we used the term before we started recording this morning, total pitch fest, total salesmanship, total just, motivate you to do whatever action we want you to do that requires money within the room that day. You learn a little bit, yeah, but you also learn things that were public information that you could have learned from anyone if you had only known that up front. And promises of calls afterwards, accountability and that sort of thing. And that never happened. Maybe a call, but nothing like what Jake and Gino provides.
So there's no fulfillment. So it's on the front end. And I don't mind going to these events because if I'm looking for information and they can package it properly and it's done well and there's a fulfillment, there's a lot of value to that. So in this seminar, was it single family homes or was it multifamily investing?
It was single family.
So it's single family. So then, so what drew you to the multifamily space then?
So you and Jake spoke at the Knox RIA monthly meeting. I want to say
October 2015. Yes, I remember that.
Yeah. Okay, so it was that long ago. Well, not until, and at that point, I was just kind of, and I don't even think, for some reason I want to say it was 2016, but it might have been 2015. But that's when I met you guys in person. Everything you said at that meeting was totally over my head. I already had my mind made up of what I was doing, so it kind of went in one ear and out the other because I didn't understand it. But when I got a free ticket to the very first live event in Knoxville, an hour into the meeting, my mind was totally made up. I'm done with single family because the numbers and everything, the scalability, creating generational wealth quickly, just all the scalability factors that came with multifamily during that first hour. I made a decision right then and there. I'm done. I'm done with single family, and so and then we just started making partnerships and meeting friends, and just went from there.
So what were your limiting beliefs about multifamily when you first started out?
Just thinking that I could get to a certain point, whether it's a number of doors, whether it's cash flow a month. I didn't know what I didn't know, and that was sort of a limiting belief for me. I needed to educate myself. We'll get into another part of the story here in a minute, but what I failed to do was take a deep breath once I got into multifamily and truly understand and learn what I needed to do to get to where I wanted to go. Because what I did was I got in your program and then I just went 100 miles an hour and I made some mistakes along the way. And so that's my fault for just putting blinders on and thinking, all right, I'm there, man. Let's just go do it. But it wasn't so much limiting beliefs because I'm a very no one has to motivate Darren at all. Do I need to have some correction on the track every now and then? Yeah, probably, but I've got enough people that can hold me in check to do that. But motivation is not an issue. So it was educating myself, and I can't stress that enough, is educating yourself. And one of the most important things I'll tell any new student or person getting into multifamily is you can educate yourself all you want through podcasts, through coaching calls, but at some point you gain so much knowledge by just talking one-on-one with people that are in the industry, that are doing it, and that's how you learn and apply, just talking with people that have been there and done it. And I failed to do that up front, and if I had done that up front with the combination of the education, then I would have missed some of the mistakes along the way.
That's great. You need to be educated, though, to be able to speak to these people, because you don't want to sound like an idiot, because you are obviously the smartest guy in the room right now, because I'm not a mechanical engineer, and I know Josh isn't either. So between the two of us, we might have the IQ of a mechanical engineer. But you really, real estate is not rocket science. I mean, if you can learn the terms cap rate, if you can learn the terms emerging market, if you can learn the terms what a cash-on-cash return is, and then have those conversations, you need to really educate yourself on all those all those terms that we're using. What did you not know that you know now? Like you said, I didn't know what I didn't know. Well, give me some of those things, because I know I
So if you recall back to the very first deal under contract in Johnson City, very first deal.
Oh, I remember that. We were sitting in a mastermind. I'll paint the story for everybody. This is how we make it happen at Jake and Gino. I flew back from New York, went to Disney for a day. We had a mastermind set up at 7 p.m. Wednesday night. I'm in this hotel room, and I think Josh is with us. It's a monthly mastermind of 10 people, right? And this is the power of masterminds. And Darren, we all paid for that education, but Darren was there and was talking about the deal. And I remember this deal specifically. It was a deal in Johnson City. It looked great on numbers. It was 1 beds. It was, I don't remember running the 30s units around that point. The property management company actually helped Darren out and said, this is not a good area. You're going to spend a ton of money, rehab these units, and the property is not going to perform the way you did it. And, I'm going to tell you this, if Darren had spent $20,000 for his education, which he didn't, or $30,000 for his education, he would have recouped it all from not buying that deal. No deal is better than a bad deal. And I think we saved him. The mastermind group saved him from pulling the trigger, and not just the mastermind group, but actually knowing the questions to ask the property management company. So I know I stole his thunder, but I remember that so vividly it happening. And I was like, and I want my students to go out and buy deals, right? I want them to pull the trigger because it validates me and what we're doing. But when we can save a student from buying a bad deal, I think that's almost a bigger win, because we don't want to get into a bad deal, because then your next deal is never going to come down the road. So if you want to continue with that story, sorry to take a thunder. But
No, you didn't steal the thunder, because the 2 big points are know your market, know your market, and do your due diligence. When you think you know your market or due diligence, do it again. Talk to people, talk to property managers, talk to other people that are investing there, get to more brokers that are investing there, talk to investors. I didn't do that. I failed to do that. I didn't do it until after I had the property under contract. So I didn't know what I didn't know within a half-mile radius of where this property was, basically a all low-income area. I had done my due diligence outside of that area and thought, oh, I got this. And then when I sat down with this property manager that I had never met in my life, who now owns our property, we do own in Johnson City, as well as some other stuff for me in Knoxville. It's continuing to put me in touch with owners of other properties that are looking to sell. Amazing asset, because it's become family. Those are the 2 biggest lessons: know your market and due diligence.
So talk about the due diligence a little bit. What are some of the steps that people can take? Because I think everyone, when they look back at it, one of the big things that Jake and Gino does, we give you a checklist of due diligence items. There's 28 or 29 things you got to do at least during due diligence, and the time period, and looking at the financials. And my first couple of deals that I did before I got into multifamily, that was the big point. It was vetting the sponsors, which was huge, and also not looking at the numbers, not looking at the market. What part of due diligence did you find that were really helpful and you can give people tips on?
Here's what you've got the checklist that you referred to, and yes, you have that. You have all the websites where you can find out the market data, if you will. But there's nothing like. But what people fail to realize, especially when they do, is there are markets within markets, and sometimes there are markets within markets within markets. Call them tertiary markets, whatever you want to say. 1 block over, that could not be the case. Although painted through data, you can't see that. Mm-hmm. So that's when you do sit down with a property manager that knows the area, or another investor that knows the area, or a broker that knows the area, and you ask those questions about, tell me about this complex here, this 100 unit that's located, a half a mile from this low income neighborhood. Does it affect it? It's people. So it goes, that I think is invaluable. You can look at all the data you want, but sometimes the data doesn't tell the entire story or picture of what you really need to know if you can work your plan and your strategy for owning that property moving forward.
So your first big deal that you guys closed, how did you find that deal? And give us some learning lessons from that first deal, the first big one.
So the first big one was because of the Jake and Gino community. Gino actually put the person in touch with me that had the deal, and because I had some experience and knowledge in that exact area, Johnson City, he put us in touch with one another. We began to speak. I immediately got in touch with 2 or 3 other people that I knew in the community. I had more contacts at that point, and that particular deal was, if I'm not mistaken, was under contract before we got it under contract, and the potential new owner backed out at the last minute because of the amount of rehab that it was going to entail. It's approximately, we got it for about 19 and a half a door. Mom and pop, C-class. Everyone was month-to-month rent. Some people were paying rent. Some people were paying $250, $300, $350 rent for a 1-bedroom, a 2-bedroom. About 90% occupied at that time. And so we have about $750,000 that we're still doing. We had to get a bridge loan to do that, and we're just trying right now to. With that, we've had bumps and bruises along the road with contractors, code violations with contractors. Now having to go back and redo some work that's been done because of code violations, and I will say that we have experienced it all with this project. I don't know that I want to do another one like that. I'm not saying that I would never do another one like that, because the value that you have at the end when it's finished is incredible. It's going to cash flow just incredible. But learn some pains and aches along the way, but it only makes you tougher. There's never been a time where I've just thrown my hands up and wanting to give up, but we know in the end it's going to be worth it.
So what's great about it, I'm going to pull some learning lessons from it myself, because from what I learned, first thing was Darren learned the market. One way to get into multifamily is provide value. He provided value for his potential partners by knowing the market, by being able to look at the property, by being a bird dog, by being able to go down and do some, day-to-day as far as talking to the property managers, talking to the construction crew out there, talking to the brokers out there. Knowing your market is really important, and actually being able to provide value for your team. And the second thing was, I'm surprised that he did that for his very first deal. I probably wouldn't have done it because I'm not as brave as Darren. So, but he knew his numbers, and he knows there's a ton of value. I mean, $350 a month for a 1-bedroom, they're probably going to go for $600 to $650, and the 2 beds are probably going to be in the 8s. So the other thing with multifamily is it's a business. That's the first thing. The second thing is it's the long game. Whether you're buying a property that's momentum, cash flowing, or a property that you have to rehab, it's really planting the seeds today and watering those seeds and making sure that there's a vision. He has the exit strategy. He knows what he's going to do. He knows the market cycle. He's still in a good market cycle, and he's got the debt piece on there. He's got bridge financing. So all those 3 components, whether he knew it or he didn't, he did it really well, and that this property is going to cash flow. So when you got this deal and you have those learning pains, what's your next step? What's the next thing that you guys do?
Just where this particular property is?
I mean, as far as going out and doing other deals or looking at other properties.
Yeah. This same group of partners, with the exception of a couple of different ones, went out and found 41 unit in the Chattanooga area. And that particular property, and have to give credit to the guy who brought it, but that particular property was, I think, 95% occupied when we got it, but it was $150 under market rent in a very blue collar working part of Chattanooga. Cash flow from day one. That was a syndication. We went in with a plan to turn so many units as leases came up. We did some work to the outside, to let the residents know, hey, we're here to make this a better property, make some improvements, which you can tell right off the bat. And then when we had 1 unit that was empty, we went and turned it. And I think the rent went immediately from 600 where it was at to 750. I think this is a 2-bedroom, 1.5 bath. There might be 2 1s or 2 2s. Went from 600 to 750 with a turn. Rented immediately. Went to the next 2 or 3 tenants whose leases were coming up that were ending again on month to month, and approached them. Property manager approached them and said, "Hey, we're going to bump your rent." Maybe it was $100, and don't know if they were offered the new turned unit or not, because I think we rented that right away. Point is that next 2 or 3 tenants that came up for lease renewal, we didn't have to do anything to their unit, and we got a rent bump of at least $100 per tenant, because they didn't want to move and they liked where they were, and so we've yet to turn those, but it's 100% occupied.
Mm-hmm. That is awesome.
It was just a diamond in the rough, to be honest with you, where the location was for workforce housing, and so and that's totally different, than what we experienced with the first one.
That's awesome. Before we get to the short answer questions, I just wanted to ask you, give the listeners out there your best advice for anyone that's trying to get into multifamily and sees the limiting beliefs and the objections out there. What would be your best piece of advice for them getting into multifamily?
Find a mentor. Find a mentor that is doing it, that has done it. And if and this is just my advice, and I know you guys will agree with this because you guys are genuine. If you're, it doesn't have to be through a community like the Jake and Gino community. It can be with anyone that has multifamily experience. And if they want to take your money first, don't waste your time with them. Just if you want to find someone that wants to give back, no matter who that is, find that person that's been there and done it and is not afraid to share their mistakes with you. It's funny, we're having this conversation just 3 days ago. Had someone reach out to me via Facebook Messenger that I connected with through Facebook that's a real estate investor, a little bit of everything, wholesaling, flips, single family, and some small multifamily. And reached out to me because we've had 1 or 2 conversations in the last year, not in the Jake and Gino community, not in the Rod community, not in Brad Sumrock community, just someone connected with, People start seeing what you're doing, they gravitate towards you. And they basically are looking for a mentor. And made it clear that's what they wanted to talk to me about. And I was, I'm a humble guy. That was like, wow, okay, yeah, let's do this. So that's fun for me. But find a mentor. The first thing is find a mentor. Somebody's been there and done that, and learn from their experiences and their mistakes.
That's awesome. I like that. Let's take a quick break to hear from our sponsors.
All right, Darren, got some short answer questions for you here. So what is your favorite book you've ever read and why?
Go Giver.
Okay, why?
Number one, it's a simple read because I'm a simple reader. I can understand it quickly. So I've always lived by the golden rule, do unto others as you would have them do unto you. And that's scripture, of course, as well. And that's very important to me. But when you read that book, that takes giving to an entirely different level that I couldn't comprehend until I read that book. And so I identify in that book very much personally with the connector. And I find myself doing that a lot. I found that I had always been doing that, but just didn't really realize it. And so now I'm intentional about being a connector, if you will.
Awesome. What about your best habit for success?
Best habit for success. Gosh, if you want to get into like maybe daily routines or something like that, I don't know if that's where you're going, but every morning, get up, go to the gym or run. I read scripture every morning. I have a little devotional. I had been doing some meditation, kind of gotten away from that, but need to get back to it. But those are, you have to, if you can't take care of yourself, you can't take care of your business. Bottom line.
Well said. Love that. All right, Gino, there's been some very powerful takeaways on this episode. I want to go through a few of them, and then I know you're going to add to it. So with Darren's first big deal, he took down a hairy one, to say the least, but when you solve big problems, you get big paychecks, right? So there's a lot of opportunity in that. And then the other one is your network equals your net worth. So with these deals, through partnership and being part of a powerful community, that's what was able to help Darren go further, faster. Gino, what takeaways do you have to add to this one?
How much time we got? I think the Go-Giver, unfortunately, will not resonate with the vast majority of people who read it when they're at a W-2 job, because we're trained to say, it's all about me, it's all about me. But if you're an insurance salesperson or you're a real estate educator like us, if you can give value on the front end, people will be more receptive to you nowadays because everything's transparent with the internet. And if you can show value to people, they're going to gravitate more towards you because everyone's out there in this dog eat dog world. It's me, 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 me. And if you can focus on just continuing to give value to people, whether it's through a podcast, whether it's through writing a book, whether it's through showing blogs, whether it's through doing monthly calls, whatever it is, you show that value, people are going to gravitate towards your brand and they're going to like you and they're going to trust you. And that's the whole thing. So you're giving them value. So you're giving to get. That's the whole thing. And it's hard when you're trying to pay the mortgage and you're trying to do your financial obligations, because you're thinking about yourself. You're also self-centered. And that's what the salesperson in the Go Giver was. It was all about him making a sale and landing the fish, instead of saying, what can I do for that fish? What value can I provide for that fish? And, whether it's, educating him, whether it's getting the best price, whether it's finding out what he really needs. Maybe my product doesn't align with him. And we're always thinking coming from our perspective. And this is important, because if you're raising capital out there and you're trying to raise capital from investors, we're thinking we need money for this deal, but do your investors want a 5% pref? Let's say that's what you're giving. Can your investors give you money for 5 to 7 years? You have to ask them those questions. So use that book to do that, because that's really important, looking at it from their perspective. I mean, Josh loves to read the book and always mentions same side selling. Find impact together. It's very similar to what the Go Giver is, and it's really trying to find impact together. And if you can work together and you can give, your life will be so much more rewarding, and you'll work with people you want to work with. So if your product or whatever you're offering doesn't fit, you can just walk away. No harm, no foul. I think the other thing, I'm trying to think back to the deals. Don't be afraid to walk away from a deal, especially your first deal, when you're really pumped up, dude, and it's exciting and you've got something on the contract. If you see something going wrong, don't be afraid to pull out of that, because you might be doing the best thing in your life. Because my biggest mistakes were I closed on a couple of deals that I shouldn't have early on, and it almost derailed me, but I had too much pain, like Darren probably from the W-2 job, and just saying, I don't want to be here anymore. I've got to figure it out. So don't derail it. And I wouldn't recommend going into a 61 unit hairy deal like that on your first deal. But if you do, make sure you have partners, make sure you have investors, make sure you have mentors who are by your side, who can really, propel you and hold you accountable. And, I know Darren had a great plan going into it. They had a really good business plan of what they wanted to achieve, and they had a timeline, and they're executing on it. So don't go in blind, and make sure that you guys are all on the same page when you go on this deal. Anything else, Josh?
I think you covered it well. Guys, I want to thank Darren for being an amazing guest on the show and sharing his Movers and Shakers story. If you want to be the next Movers and Shakers, email me, josh@jakeandgino.com. If you like the show, please leave us a review. And until next time, let's make it a Movers and Shakers week.
Thanks, Darren.
Guys.
All right. Thanks, guys. Have a great day.